morning, signature agents, and welcome to our weekly office meeting. Kind of a sparse crowd today, and I didn't tell anybody that I was doing the meeting, so I'm surprised. So, does anybody have any wants and needs? Do you have a new listing you need to sell? Do you have a buyer that needs to find a property? Patty!
Yes. Thank you. I've got a new listing in Summerlin. Oh, you don't think I'm loud enough? They can usually hear me down the street. Chris tells me they can hear me anywhere. Got a new listing in Summerlin. 505,000 is occupied by tenants, but they are moving out the 15th, and it can be shown between 3 and 5. It has been a rental, and it has a pool, 1,700 square feet, 3-bedroom, 2-bath, 2-story in the heart of Summerlin.
What's it rented for?
505.
505.
505.
That's the sales price, not the rent.
Oh,
Hello?
I have a question. I just got a call from a seller who wants to sell now but live in it for 1.5 years. What is your opinion? Anybody?
I'd say good luck with that.
I'd say if they can agree upon a rent and then they can have somebody else besides the people that were on title, maybe another family member, do it, I'd do it that way, but I'd be very leery of renting to the person who's the previous owner.
Anybody else? Linda?
Jeanette, she talk about this or not?
Oh, yes, you can.
If they want to rent for 1 year and you have an investor that comes in, you can certainly do that. Otherwise, 2 months is the maximum, I believe, isn't it, for occupancy after the fact? So, but if you have an investor, they can make some nice hefty money and have a built-in tenant for 1 year. I think it's a good thing all the way around, and it makes it a win-win.
Thank you.
Yeah, but wouldn't your rent payment be probably higher than your mortgage payment? Just saying.
Probably. Yeah, but if they want it, then, yeah, there's no choice.
I have a coming to the market that is looking for the same thing. Put it on the market and rent it back for whatever it takes, maybe a year.
So sellers are, so investors.
Okay. All right, Masako.
I have a listing about must be 7 million. I make 698888, something like that. If you guys have a buyer, talk to me about 7 million.
Luxury home or commercial?
No, it's a luxury home. I haven't seen it, but I've been told about the 7 kids' bedrooms that all are en suite with a 2-story closet. I can't wait to go see this house. It's in Spanish Trail for just under 7 million.
John?
The tree is 25,000 square feet, but the owner was a builder. He tried lower the price, so 30 years ago he did something recorded by 20,000, but the tree is more bigger than that. So the guest house alone is 2,000 square feet. Very big, very fancy. Inside, all marble everywhere. They stay there, never moves 30 years. So now it's time too big for them. You know, only 2% there. So
Okay,
John.
I have the condo I mentioned last week is going live. It will fit in that closet. It is adjacent to Chinatown, $185,000. It goes live today.
Is that the 2 bedrooms, 2 baths?
Hello everyone, Chaz Hernandez. I'm new to the signature here, but I was with DXB for 1 year, licensed Becky's 13 years. But I'm selling my condo here that I owned for 17 years in the Las Vegas Country Club. 255, it's 1 bedroom, 900 square feet. Listing at the end of the week, and it rents real easy. I've always had it rented except for the year I've lived there, and now I'm tired of living there. So, but thanks.
Okay. Thank you and welcome, Chaz. Anyone else? No one else? Okay, before I forget, I just want to tell you that next week, almost your entire management team will be in the DC area for the mid-year NAR convention.
Woo, that's party.
With the cat's away. So anyway, we will have an office meeting, we will have a mortgage moment from Prosperity Lending, but the whole thing will be on Zoom. Beta's going to be in charge of setting it all up. We have, MLS has a new program coming May 10th called One Home, and it is a new client portal for your clients to go in and check for properties on their own. And Kathy Haney, otherwise known as Red from CoreLogic, will be presenting this new portal. And there are also like 5 seminars set up through, starting this week, I believe, through the middle of May, if you want to do it, but we will have her live via Zoom next Tuesday. Okay, next up, Shelley with Mortgage Mocha from Prosperity Lending.
Happy Tuesday, everyone.
Great.
Okay, look to the person next to you and say, you are amazing. We gotta get this energy level up. You are amazing. Okay, awesome. So a couple things I wanted to chat about. I saw on Agents' Signature there were some questions about the down payment assistance program. There have been some changes just because of where the rates are at today, that they're omitting some of the programs just because of interest rates. So right now what we're seeing is the first-time home buyer program has been open. It's remained open. That is very specific to a 660 minimum FICO score, also sales price restricted and income restricted. So be very careful when you guys have clients that are in that space. I know for us as lenders, we're alerting everybody of what the actual parameters are around that. Conventional is pretty much off the table at the moment. And then for Home at Last, which is our Nevada rural, which is specific to zip codes in Enterprise, Southern Highlands, or some South Summerlin. There's a little piece in, I think it's Whitney Ranch, Winchester, small areas, pockets in Las Vegas. They do have some conventional financing open, FHA, which is the 1% to 2% down payment assistance without the restrictions of being a first-time home buyer.
Does that include Grom too?
It does, yeah, great. Yeah, and those are their outliers, so like Mesquite, Locondale, Overton. But your main area of Las Vegas is Enterprise, South Summerlin, Southern Highlands, and then, like they said, that area inside of Whitney Ranch and Winchester. Best way to do it, contact one of your Prosperity Lending officers.
There's a list of zip codes.
It's not zip code specific, believe it or not, it's address specific. So even inside of that line across the street could be on the opposite side of it. But inside it, there is an actual link that you could check if you're just checking references, or you can always reach out to one of us and we'll be happy to do that for you. Something else I wanted to talk about is the ability for us to get our buyers actually accepted in a cash environment. How many of you guys are running up against that? Cash right now seems to be king. One way that we're doing that is to get our buyers actually all the way approved through underwriting, what we're calling our TBD, so to be determined, underwriting approval. That gives us the ammunition to basically communicate to our listing agents that, listen, this is pretty much like cash. All we have to wait on is, of course, the appraisal. I know in some cases there's the appraisal contingencies and things like that, but it'll allow us to close in about 15 days. As long as we can get that appraisal in. Obviously, VA may be the unknown just because they do take their time, and by their regulations, we still have to wait that 10 business day. But for most FHA conventional buyers, if we go through the process of getting them fully pre-underwritten, so everything is done, pretty much everything from the income, credit, assets, all of that has been reviewed, there's really nothing else that we need other than the appraisal, which we can get rushed in that due diligence time frame. So if that is something that you're wanting to have happen, all you need to do is let one of us know that you want to submit it in for a TBD approval, and we can get that in so that can be more powerful, hopefully, than our traditional approvals. Any questions at all about that? Yeah.
What would be the typical number of days to put in for the appraisal contingency on something like that?
So
to bring it down from what we normally do.
Yeah, I mean, it's honestly, if you want to rush it, you could get it done in a 10-day period.
You're right in the contract when you present it. So
14 days, 14 to 15 days. For conventional FHA, VA, I would still give you that 21 days. But even with that, it's faster on a VA loan. I mean, we had a buyer, I don't know if it was VA, but we basically had everything ready to go. And what was the appraisal? It was in Elko. And it took some time to get the appraisal in, but the moment that we actually got the appraisal in and went in for final underwriting, we closed it like 2 to 3 days later. So definitely can help you in a situation. Yeah, Jason.
Does the VA set a certain amount of time that the appraiser must return an appraisal by?
Yeah, so the region that we're in, it's 7 business days by law that they have to respond. So really we can't start to bother them or communicate with them until after that time frame. But keep in mind it's 7 days from the day that they actually accept the appraisal. So I always say give yourself that 10-day window because we get the contract, right, day 1. We got to disclose day 2. We then have to issue the case number and then send it to VA, which then VA kind of shotguns the request out to the appraisers, and then one of them will come back and accept it. That's really when day 7 starts for them. Great point. Any other questions?
What's the rate at today?
Rates. So I just came back from vacation, and it seems like rates have actually gone up about 0.25%. We are at the 5.25, 5.5 mark right now. Yeah, but I would like to say, because I'm always Miss Pollyanna Sunshine, just remember that before COVID, we were actually at this rate environment. I know sales prices and things were different then, but I think for all of us, it's because we have been in this 3% environment. I actually had a client that asked me, he's moving here from Vermont. He has to rent or he has to buy. So we did the options of what it would look like. His agent said, here's what it would look like if you decided to rent here. And then of course I said, here's what it would look like if you decided to buy. His biggest concern was, well, what if the rates go up? Like, well, do you believe that it's going to appreciate? Values going to appreciate? Yeah. What if the rates happen to go down after you bought the home? Well, then you could do what? Refinance the home. What will happen if you actually decided to just rent? Your rent could continue to go up, but the appreciation in equity is not being gained based off of him making that decision to rent. So what do you think he decided to do? He decided to buy. Yeah. Yeah, hedging against everything we know, right? If we know that the values are going to go up, maybe they don't go up 20%, maybe they go up 5%. We know that rates are going to, we believe rates are going to go up. This would be a great time to buy today. And if rates happen to go down, which there's a lot of speculation that rates will go down, not like tomorrow, but soon, like because of the recession and all this stuff that's that's about to happen. If we do see that, they'll be able to refinance back down into a lower interest rate if they're concerned about the rate being in the 5s today. Make sense?
Yes.
Cool. Anything else for me? All right, back to you.
Shelley, see you again in just a minute.
Okay.
So, in October of 19, which was not that long ago, I sold my son a new house, and brand new. By the time he closed on it in October, guess what the interest rate was? 5.5. Did he walk? Did he say, oh my God, I can't pay 5.5? He said, no, I love this house, I love this house, I love this house. And then once we got into COVID and the interest rates started to drop, guess what? We refinanced it. So don't panic over the interest rates. When I first started in real estate, the interest rate was 17%, and I survived and I sold houses. Okay, speaking of selling houses, if you're selling condos, and you're required to have an FHA certification done, or questionnaire done by the HOA, and I guess the HOAs, a lot of them are like not doing it. So we have our own Shelley from Prosperity and Marie Herod from Equity Title to come talk about this new thing that's going on and what you as an agent can do about it, because it is causing some problems. So come on up, ladies. And I want to take, before they start, while they get settled, I just want to take a personal moment and make a little announcement. I hope I can get through this without crying,
I will too.
but Marie Herod is going to leave us. Now, I have worked with Marie, I can't even tell you how many years. It's been years.
James is 18, so.
Well, no, the first time I met James, he was 5, but I knew you before then. So, but she's not your average title company marketing rep. She has given me over the years more good ideas for office meetings. Hence this one today. This was Marie's idea. She called me up and said, have you heard about this? And I said, no. And she said, we have to get a sales meeting. And that's before it really started happening. It just so happens that today's the first day we can get her. She could do a net sheet in her sleep. I have one agent in particular that I know, for sure, never writes an offer without calling Marie for the net sheet first. She is knowledgeable, she's fun. Marie and I have done wine glass painting happy hours for years. And we started doing it at Christmas time, and then December just came so busy, we then switched over and we started doing Valentine's wine glass paintings. She's brought us tons of 1-hour CE classes. She has provided more value than, to me personally, than any other title rep I've worked with. And she's moving to Virginia. And I'm so sad. And it's hard to be happy for her, but she's bought a beautiful new...
We can still do Zoom happy hour. She told me she'll be done with dinner. We'll be at the right time of the day, and we can just do a Zoom happy hour.
Hey, the CR did it all during COVID.
Linda's Pollyanna Sunshine also.
But she has bought a beautiful colonial home in Williamsburg, and she and her husband have bought a title company where evidently their marketing reps you don't ever talk to, ever. They don't provide any value at all. So we know she's going to be a tremendous success, and I'm happy for her, but personally I'm just very, very sad. So.
Thank you. So this all started with a call that I got from another brokerage, and they said, hey, oh my gosh, we had 3 transactions that died this week. You know, the paperwork didn't come back. We need a panel, and I need an escrow officer, and I need a lender, and I need an HOA. Well, because they feel as though escrow, that, you know, we received the demand, we're in charge of this document, and we aren't. We don't ever see it. And so I was happy to facilitate everybody who does play a part in that. Escrow just doesn't play a large part in that. But what's happening is, you know, your buyer is going to get an FHA loan. There's a condo cert that has to go out. That is now grown in size. And so some HOAs say, well, we're not going to fill it in. And how is that affecting you? And what conversations do you need to have with your seller? And what conversations do you need to have with your buyer? And what can you maybe do ahead of time to kind of jumpstart all of that? So we did have somebody who was scheduled at the last brokerage as a community manager to jump on board, but she would only do it via Zoom. They scared all of you. And then she ghosted us, and her assistant couldn't find us because I think she was afraid it would be like the firing squad, and we were never going to let that happen. But you guys need to know how to talk to your clients and how to get them prepared for that. So I have a portion of it. Shelly's got the last few pages of it, but Shelly might be able to give us an idea of why did they expand it, what's been happening, what is she seeing on her end, and what do we say to clients, and how can we kind of get that going and kind of get that process started a little bit early. We had one that was the week before, and they came back and they were, no, sorry, we can't do it, and it was a week from closing. So how do you prepare everybody for that? What do you think about earnest money? So all of that comes into play with what's going to happen.
So really quick, just to clarify, FHA and VA, if they're on the approved list, you don't need a questionnaire or any of that stuff. This is really Fannie Mae, so it should be FNMA or Fannie Mae, which is your conventional financing. Just so that those of you here, those of you at home might be seeing this as a broadcast, I just want to be clear on that. If it's FHA approved, good to go, no concerns on that.
And they can call you right away to see if that's FHA?
Absolutely, yeah. There's a link that we'll send in. Any of our loan officers will be able to provide that for both FHA and VA. Yeah. So this really started, everybody remember about, the devastation that happened in Florida with the condo project that fell, and I think under 100 people were, yes, yeah. And a lot of that was because of what they call delayed repairs. And, everything was noted as far as, some people are saying it was because they were building the construction, the luxury condominiums next door, but there was still some structural things that should have been done in time. And so because of that, and they know that there's a lot of older units and a lot of condo conversions that are happening, not just here, across the country, this is something that Fannie Mae has imposed upon us as lenders. And I think the biggest thing to think about is, or to understand, is where this questionnaire comes from. Because a lot of questions happen of like, well, we get the demand, we get the, when you get it from the HOA, the resale package, it's totally different than that. And a lot of times, first, from a buyer standpoint, you want to prepare them for that timeline, because how many days does it take to get a resale package? 10. Without rush, right? Yeah. Same thing for us as lenders to get the questionnaire. So if you're dealing with a condo, just know that that's going to take you some time to get the questionnaire without expediting it. There are some cases that you can expedite it, but again, that's an additional cost. And then there's some that they don't expedite. That's just their processes. It is just going to take 10 business days to do. So before this came into place, which was January this year, we would be able to get the questionnaire pretty, basic as far as some of the things. The biggest things they looked at was litigation. They looked at delinquencies to make sure that there were not more than 15% delinquent for 60 days and older. And then really occupancy. But if you're an owner-occupied property or owner-occupant purchaser, it wasn't really that big of a deal. Now they're actually looking at significant deferred maintenance, which includes deficiencies that meet one or more of the following criteria. So full or partial evacuation of the building to complete repairs. So meaning that if repairs have to be done on that property and it's going to take longer than 7 days, that is actually going to make this unit ineligible. The other part would be project deficiencies, defects, substantial damage that affects the whole unit. Now, there are some cases where there's been a water leak, and maybe that water leak affected 1 unit, 2 units, whatever that's actually acceptable. It has to be explained. There used to be a case where we, if for some reason there wasn't enough reserves, we would get a reserve study. Do you guys know what a reserve study is on a condo project? That ultimately would tell us what the upcoming repairs are going to be for the project, and that gives the HOA community manager or the community association more information as to what to do with their, how to prepare for those reserves and those pending repairs. One thing that we've found is a lot of the community associations, they want to try to keep the association fees as low as possible, right? Why? Because it helps with your resale, it helps with your home ownership and all that other stuff. But if you've got these impending costs, at some point they have to be taken care of, which is what we saw, unfortunately, in Florida, was that there was a lot of delayed maintenance, and in that particular case, it created that type of devastation.
So we want to try to figure out, there will be no complete resolution when we're done with all of this, right? Because again, I think Shelley would agree, the HOAs aren't required. They're not, there's no statute or law that says you have to fill all of this in. Some of them, your front desk girl sometimes isn't the one filling it in. She has to send it someplace else. If there have been repairs done, there's a date asking when that was done and what was done. So some of the people don't have that information. They're sending it off as well. So we really just want to have those conversations with you guys. How can you prepare your clients? What can you do ahead of time? Like Shelley said, going on and seeing that, hey, it is already FHA approved, we're good. Maybe there's something in the MLS where you can go on and see something that is sold and check through it that way. It was even mentioned that this form gets sent ahead of time to the HOA, right, at listing. Then you know what kind of offer you can even accept, whether it has to be cash, whether it can be. So we just want to have those conversations with you guys today, kind of what some of that is, because we want you to be able to sit with your buyer or sit with your seller and say, hey, this is the situation, this is what we need to be prepared for. Being kind of proactive instead of, oh, by the way, oh, look, I kind of knew that going in, sorry I didn't share that with you. It's all about that expectation that you set with that client, because we are the ones that they come to. It was assumed that we're the ones that get it, so why aren't we getting it back? Why aren't we checking on it? Escrow doesn't do any of it. We don't even see the document. So if other agents are assuming that, some of you guys might be thinking that too. Oh, you got the demand, so you got that condo cert back, right? A lot of times they put in not applicable in a lot of areas, and when the lenders get it, they send it back and go, no, it is applicable, and I need you to do it again. Okay, well now how long is that going to take? So,
go ahead, Lyndon.
Well, I have a question that's probably more for you, because we're on. The question I have is it possible for us to get this form as agents
and actually make a phone call to the HOA and say, would you mind going through this with me? I have some questions on these things, and fill it out and then send it to them to be signed. Is that something we could do, or no?
Your seller can do it, right? Your seller can absolutely do it. So I had asked Vonda this morning, is there a timeline that the HOA actually, the documents actually expire? And that's 90 days. That would be the same thing for us as lenders. Because we'll go back into some of our old files and see if we've closed a home in X community to see what that looked like. Obviously, it can change, right? Because a home closed a year ago, deficiencies, whatever might happen, but you have a general idea. But to answer your question, yeah, as a listing agent, that would definitely be something that you might want to encourage. I know in today's market it's different, it's right, because the sellers may not want to spend the kind of money to do that, but here's some things you can ask them for. Every owner is going to get the community minutes, right? They're supposed to get this great thing in the mail. Some may throw it away, but they should be getting, whether they participate or not, they should be getting the community minutes. And I would ask them to take a look at the last 90 days, even 6 months to that point, to have that ready for you. They'll also get notification if a special assessment is going to happen, because that's basically saying that, hey, the association has noted that something has happened in the community, and they're now going to say there's a larger bill that's due to be paid because of whatever it may be. We're now going to impose a special assessment. How many owners are going to know that that happened? Every single owner is going to get upset about the fact that they just got a special assessment bill. So that's one way to prepare them. Or if you're doing a listing on that, it's just to ask that general question. Have you received any notice that there's potentially going to be a special assessment placed in addition to your normal HOA dues? And then I would really ask them for the minutes and even the budget at that time. Those are things without having to get your sellers involved in ordering that. If they do want to order the questionnaire, then of course that's going to be super proactive in getting that. I think the other thing is you have to work with the right lender. And I'm not saying that because I'm biased, because I think that we're the best. We're one of the best in Vegas, especially with condos. I mean, we closed one with Roya. Myra was able to help through that. Gabby has another one that is, I don't know if that was resale. But it was also a new construction at Waverly. This one is resale and new construction at, was it Mesa Villas or?
It was Maribel.
Maribel.
If I could just say something about this, because this is all brand new to us too. So we didn't know what the problem was. We couldn't understand why HOA wasn't signing this questionnaire. And, we went as far as to find out, is this a violation of NRS 116? Are you standing in our way for getting a loan? We really, Myra and I, continuously contacted HOA, and finally they were able to, not necessarily did they answer all the questions that we needed, but they did get legal involved, and they were able to give us enough to get it to the next stage. And this was it was almost $1 million. So it was actually, if it wasn't for Prosperity Lending, it honestly would not have closed. We went with another lender at the beginning, and they just fell out because they didn't even know what to do. So these guys are really, really good at what they do, and we wouldn't have this closing if it wasn't for them. So
thank you, Roy.
Yeah.
Have you ever closed on a condo sale?
We have, so that would be more non-traditional type financing, the condo tel. So that doesn't apply to these questionnaires. It's a completely, so in that particular case for Roy, that would have been our backup option. Is if we couldn't go traditional using the Fannie Mae program, we would have gone through a non-traditional program, and they don't require this. The addendum is something that's new. That actually we ran into with Gabby's deal. So it ultimately is, keep in mind, many years on the road, Fannie Mae published, hey, we want you to have this specific verbiage inside of your bylaws. So all of the associations, some even went and re-amended those bylaws to put that information in there. Then they just came out with this new regulation or this new request. They're not going to, nobody's caught up to that. And it costs money for them to go in and update or amend or whatever it is to redo their declarations and bylaws. Nobody's getting, that's hard for us to want to, and this is a temporary thing is what they're calling it. So that's one of the conversations that we can have. You also have to work with a lender that has the flexibility to make those types of decisions, because that's exactly what happened. The only thing we were able to get was the HOA to go to the attorney to create some form of legal statement for us, and that's what we provided to our underwriting and investor, which not every lender would have done that. you know what I mean? So that's one thing.
The lender piece is very important. Sometimes you guys have a buyer come to you and they already have a lender, right? And maybe you don't know them, you've never worked with them before. That could be a big deal, right? So have them at least talk to your in-house people, because they may have a lender who might not understand that process, right? And so at least have them talk to somebody. When you have your in-house folks, that's super important, because they want to get it closed too. And like Shelley said, there might have been another way to go about doing that for you that another lender might not have been aware of or thought of, because condo tells aren't maybe their environment somewhere with what our environment here in Vegas is and what it is everywhere else. So super important that you guys know who your lenders are and know what they can offer you. Even if the buyer has somebody else, get them over to talk to Shelley once you realize kind of the product that they're looking for. I only play a realtor on TV at night. I'm not one for real. So the fee for that, is there a fee if the seller wants to get that process started early? Does the HOA charge for that 8-page document to be filled in?
You know, honestly, I don't know. I would assume yes, because it's all
I thought it was
ordered.
$350. Somebody told me it was $350.
They range.
Yeah,
They
yeah.
definitely range depending. So there's several different entities that manage these forms or manage the communities. And so however, like we go through a search engine. We use some of your MLS data, but then we also do a search, is it HOA lookup? HOA lookup, have you guys heard of that website? Well, yeah, so we use that as one form, because, you know, the other thing that happens is a lot of the HOA management companies change. They transfer mid-ship, you know, whenever, mid-year, escrow, whatever the case may be. Your owners obviously, or the sellers obviously should have first information on that. But that definitely is it. So for most of your sellers, it could be $250 to, I mean, we've seen them as high as $650, you know, so it all varies on that.
So to clarify, so I just mentioned I have an older condo coming on the market today. The seller has indicated she's willing to go ahead and order the resale packet up front. So that's not an issue down the line. So this is something else that I need to ask her to order at this point?
Yeah, if your seller is willing to do that, I mean, we'll even give you the information so that we can, because it's a third-party link. Just like your resale packages is a third-party link that goes to your seller to pay and, you know, complete all the information. We can send you this
It's an
thing.
additional expense
It
that I
is.
didn't know about.
It is, yeah.
So that's not necessarily a
Yeah.
pleasant conversation.
Yeah, but I mean, I think in that particular case, it will open up the buyer pool too, right? Because this way you'll know for sure whether or not it can go conventional financing, because there's no exception to this rule right now. If there are deferred maintenance items, it will completely make that condo division or subdivision ineligible
Or just,
for conventional
or
financing.
just change the finance and consider just a cash.
To cash, yeah, yeah,
That would
absolutely.
probably be the easiest thing to do.
Ask for maybe the reimbursement from the buyer at closing for that piece of it. You know, we had an agent that said that that's what they were going to do, was ask for a buyer credit for that amount for that package. So.
The FHA approved building have changed?
No issues. FHA, if it's on FHA or VA approved condo list, we don't have to order these. We don't have to do anything other than getting the updated insurance for the condo. Yeah, very easy. And then again, keep in mind for FHA, we can do a single unit approval. Similar to this, we got to order the certificate, and we have to go through the same process as we would, as what we're talking to right now.
Of course, I can't come to these meetings because I ask too many questions. They don't let me come anymore. I'm just kidding. So a thought that I just had, back in the day, and I'm sure Janet remembers this, when we first started having to do the certificate of resale, we only had to do it if the association was over, what was it, 200 a month at first, and then it went down to 50, and now we have to do it if there's any association fee at all. So right now, it's just conventional, but I would bet, the way these things go, that it's gonna go and be for any FHA, VA, whatever kind of loan you want, unless it's cash, you're gonna need one of these. So, just my thoughts.
Yeah, keep in mind they're doing it for the safety of our buyers, right? And for, I mean, obviously ourselves. If you have a home, and it's owned by Fannie Mae, they're not going to come back around and say, hey, by the way, we're now imposing this, so now we have to refinance or change your loan. Everybody that's in the building that has a conventional loan or FHA or whatever the case is, that remains the same. This is moving forward. And specifically because of what had happened in Florida. What other?
Anybody has had this, I know you've had the experience, Anybody else has any issues? Yeah.
So how are you working with condos that are expired or have never been linked up with the FHA?
So that would be the same process of what the single unit approval, so you can do that. And here's the thing too, I mean, this is really the difference, and I'm proud to say that our team is very, very versed in condo financing. Like, if I talk to any other lender out there, they will give you just superficial information about that. We, not only do we know a lot about it, but we know how to communicate with our HOA community managers. Sometimes, I mean, honestly, I think we were even telling Meyer, like, hey, if they're not gonna be on the phone, where do they work? Like, we can go and sit in their actual location.
Coffee and bagels sometimes works great if you wanna like juice somebody up.
Exactly. But I think that's one thing to think about. Specific to FHA though, if you do have a home, a unit inside of a condo that is not FHA approved today, you can go down the path of getting an FHA single unit approval. Again, that requires this certification, right? So you still have to go through the exact same process that we're going through today, but it is not a simple like, oh, it's on the FHA approved list, good to go, move forward. Does that make sense to everybody? Yes, Jason. I should have him sit on the panel.
How long does that take?
I would say 45 days. I think we did it was 45 days, right? Again, so we actually had the seller participate in that because some of the stuff they wouldn't communicate to us, but they're owners inside of that community, and so they should respond to their homeowners, right? And so she got involved with the listing agent who got the seller involved, and so everybody was on a first name basis, but that type of communication amongst all parties is something that helps to make the transaction close. Does that make sense?
And on that particular situation too, like we as agents had to really get involved with calling every layer. Like we sat on the phone, like I called and I sat on the phone and they said, well, we'll call you back. I said, no, I want to talk to the manager. The manager comes on, no, he's not the right person. So you have to hold up for the next person. Literally you're on the phone for hours, but you finally get the right person. And that person, Felicia, she was amazing. She actually went upstairs physically while I was on the whole downstairs. And she went in front of this person to say, hey, look, where are we with this? You guys just had a meeting. The lady's on the phone. And she called me at 6:30 at night. I mean, you have to be very proactive if you're going to do something like this.
And realize that, again, it's sometimes not the girl at the front desk, and that's who we get angry with, right?
Yeah.
Where is this? Where is this? A lot of times it has to go up a level, because not a lot of them really want to sign off on any of that. So they're happy to pass that off on to somebody else at a higher level.
Yeah, even your lenders, though, understand that, like, it's not just because we get the cert, it doesn't mean it's the green light to go. We have to get it approved by our condo division. Every lending institution has a condo division. So I always tell our clients, if you're doing a condo, it's a buyer, it's a two-part process. You as a buyer, amazing, we're gonna get you through underwriting, here's our normal turn times. With the condo side of it, the condo unit, it also has to go through an approval process. Separate, they work kind of in tandem with each other, and they meet up at the end to basically go to docs. Understanding that process, though, is one, making sure that we have all the information up front. I mean, for Roy and I, before even we were taking it over, we were calling, because in this case it was a builder who took over the resale. We called the builder to make sure we had the correct information. We called the HOA community, all of that before we could make a decision on whether or not we could even proceed. So communicate with your agents, your lenders, and obviously your buyers to let them know. There's going to be an additional cost, whether your sellers take it or your buyers take it. It's not something that the lenders can really pay for.
And they worked on it after work hours too, by the way. Sorry, I had to throw that in there. It wasn't just until 5 o'clock and I'm not answering the phone call anymore. Like, Caitlin was super impressed that Shelley and Meyer got on the phone after 5 o'clock. It was like 6:30, I think, when we contacted Shelley the very first time. That's all.
What is the extra fee?
So again, dependent upon the community association. So varies. I think the rushes are like 150 up. It really depends on, and it's the same thing with the resale packages, right? Because you can either get it like in 5 days, or you can get it overnight, or you can. So those same costs are going to be are going to be the same, dependent upon the association facilitator. I don't know which.
How is it affected if there's like a sub and a main association? Like, in Summerlin, you've got that a lot. So is that any different, longer?
Same.
Yeah,
same. You have to get for both, right? You have, so if it is in Summerlin, you have to get the Summerlin Master Association. Now they don't have a ton of stuff, right? Because it's really just community. It's not really we're not looking at the specific structure of the subdivision. They're talking about the whole master plan of Summerlin. So usually there's not, the biggest thing you look there is maybe if there's litigation. But in most cases, your master plans are not the biggest, yeah. But we still have to get the documentation.
So I think the takeaway really, I think you were getting ready to raise again, weren't you? Oh.
Back to you, Jason.
Why is VA so much better than FHA when it comes to condos?
I mean, they have more that are approved. I don't know that they're better, because I have not gotten one approved through VA, but there are definitely more condo, and I would just, my own opinion on this is because they're looking to get their veterans into homes, right? So, but, yeah, I mean, that's going to be the case for all of our buyers today, but I would say it's going to be the same process for, I've never gotten a VA single unit approved.
Really?
Yeah.
See, mine's the flip side. I've never gotten an FHA one approved.
Oh, good.
VA only.
Well, good to know. So Jason does the VAs and I do the FHA. If you guys have any questions. It's a true partnership.
Give her the FHAs, for God, I don't want them.
I think the biggest takeaway for you guys is just, again, communicating and getting Shelley involved. Even if somebody says, hey, I've already got somebody, you know what, that's awesome, they're probably great. I do have somebody that I just want you to talk about just because of what we're particularly looking at for you to purchase. And then Shelley may be able to fill them in. There's a lot of yes men out there. Oh, we'll get you that loan. Oh, it's not great. We're an awesome realtor. We're awesome lenders. We can always get it done. Well, maybe they can where they are. Maybe they've not had to deal with this here. But a lot of times, people just say yes, and then they go, oh crap, how do we do this? A lender has to, you have to have somebody, like Shelley said, that knows what they're doing with these. Because again, these are also your referrals. Remember, once you get people in a house, that's your referral base. And so to have something go south with that's going to affect you down the road with your business as well. So it's about communicating with your buyer, getting people involved early, staying diligent, right? There's some agents that, I placed the phone call, now it's on them. Not in this industry, you can't do that. If you want to make any money whatsoever, you have to stay on people and be diligent about where is it. And sometimes candy and donuts and coffee does go a little extra mile. Being nice. Being nice, walking in and screaming at the young girl at the front desk. We get it, right? Your buyer wants to be in. You got a seller who wants to know what's going on. That poor girl at the front desk probably hit a button that was forward to somebody else, right? So think about what your clients are asking for. Think about what your seller needs, right? If your seller's got to go, if this is going to extend it or be an issue, think about earnest money and what happens with respect to that if it's last minute when it gets canceled. Have those conversations because people don't remember, right? And also we talk about just in the midst of all of our business is your documentation, right? Meet with them, talk to them, send an email in writing. This is what we talked about today. You talked to our lender, Shelley. Shelley said this, and these are some of the time frames, and here's the cost involved, and you may have to give that credit back to the buyer. And so that when all of that comes to fruition and they're so excited to close, they don't go, oh, I don't remember talking about that, right? Because people forget. They get so excited about getting in their home, they forget those little things. But then they see them at closing and they go, oh, I don't remember that. So document all of that when you talk to your client. The one with the best paperwork wins. And at the end of the day, they do come back to us and want to know where is it, why didn't you, I didn't know. So again, there really is no end-all be-all to this except be very diligent with your time and with what you are doing with your client. And again, just keep them all in the loop. Let the seller know what's happening, let them know ahead of time. If you're looking for, any kind of a buyer, here's some of the things that could be roadblocks. They may decide then, we just want to do cash only. I mean, however that process works out, everybody has a reason, everybody has a purpose, everybody has a plan. And so just make sure that you're working with the people that are going to help you make that happen. And typically your in-house people are the ones that are there to try to do that. So.
And just because I'm on the hot seat, that is really just me, but know that the whole team is very versed. And really it is collaborative, like if I get if one of my agents calls in and says, hey, I want to get a VA spot approval, I'm going to reach out to Jason and say, how did you get that done? And vice versa. But we all work together in tandem to help you guys be successful in whatever it may be, but specific to your condos and your association and community manager.
Anybody have any other questions? Well, I thank you all. I've had so many friends here over 27 years, and so I thank you and Janet for letting me roam the halls and visit. And so I will miss everybody, but I got about 4 more weeks, and then I'm out.
To clarify, I understand will be the seller take care of that. Otherwise, any buyer will have to request a questionnaire.
I'm curious how they-
So, great question. So the question was, should the seller take care of the questionnaire? So, I mean, I would give them the pros and cons of it, right? And set the right expectation. I'm not saying the seller should do it. I think some things that you could ask in advance of that, as you're meeting with them, is, have you received any special assessment notices in your community? Can you show me, or can we review do you have your HOA minutes for the last 6 months? I mean, that's specifically from the Fannie Mae website that says, what are the best practices? You should review the past 6 months of projects' HOA meeting minutes and obtain information on any maintenance or construction that may have significant safety, soundness, structural integrity, or habitability impacts on the unit or the project. So that would be something, if you're doing a listing for somebody in the condo project, it's that stuff to prepare them for. If you want to open up the buyer pool and you want to make sure that it's a easier process, that would be a suggestion I would say for the seller. What's it?
From the seller.
Yeah.
To cancel because.
Absolutely, yeah, and so I love that thought process on it, right? You're encouraging your seller to take care of it now, even though there's an additional cost. And like Marie mentioned, you could defer it to the buyer, right? Whatever the cost may be, just send in the demand paperwork. That definitely would help the seller know that this is going to be not necessarily easy, because condominiums are going to be tough. You still have to get the certification and get it through the approval process. But if you see roadblocks at that moment, you can at least take care of it then, rather than 3 weeks into the transaction and struggling to get it closed. Yeah.
Shelley, hi, absorbing all this. So, what did you mention the HOA lookup? What would that do?
So the HOA lookup has anybody seen that website? You ultimately put in the community address, and it pops up the phone number and the actual, whoever's holding whoever the HOA management company is at that time. So we use it as a reference because sometimes it's moved, and so when we're trying to chase down one specific questionnaire, they're always like, oh, well, that went to XYZ management company, so then we call that So that's one easy way for us to figure that out. That we can place in the agent's signature portal for you guys.
And that changes sometimes quickly. I have escrow officers that will come and go, hey, this isn't the HOA that they have on the MLS. Can you help us figure out who the HOA is? So, sometimes they sell those and transfer those like we change our clothes every day. And sometimes that's a hard thing to keep up with too,
Yeah, but your owner, the sellers, like I get a ton of stuff from we all do, 80% HOA, and even if it's a planned unit development, you get notifications of these transfers because they gotta make sure you pay the HOA, right? So your sellers should have that information, or your owners should have that information. Okay.
Anybody else? All right, well, I hope this gave you guys a little bit of information and maybe made you feel a little bit like you've got some ammunition when you go into some of these things to better get your client ready. And so that's all I've got for that.
Great, thank you.
Thank you.
I see it. Right, exactly.
So Shelley was the opening act, and she's also going to be the closing act. So if you follow Facebook, you know that last week was, what was the week before? Shelley's birthday, and you thought she was on vacation in New York. No. On her vacation in New York, she went to the Inman Conference, so she's going to give us a few of the tidbits she gleaned from there.
Yes, okay, how many of you know about the Inman Conference? So that was my very first time. I always wanted to go, timing around everything, birthday, Easter, all that stuff, made it really, made it great for me to go there. And of course, Brandon was there. He has some great notes. LVR, I think Wendy was there. Tom was there as well, so make sure you get him. I'm sure they'll do a panel on this, on some of this stuff. But a couple of the things that I took away. So video and social media are and I know a lot of this is going to sound the same, but really every single person up there talked about video and social media. And the reach of, one thing I thought Ryan Serhant for $1 Million Listing, really admire that guy. So he was on there and he talks about being a realtor, and because the biggest thing is what do I create for content, right? But you're a realtor firsthand, but what else are you? What else do you like to do? Do you like to, and I threw sewing out there, I don't know why, because it's not what I like to do. Shopping, do you like to go mountain dancing, salsa, whatever it may be, whatever your passion is, people want to know who you are, and that's one way that they can relate to you. Plus, it's so much easier to talk about things that you enjoy than talking about something that you think you have to talk about because it's content related to whatever it may be. Does that make sense, everybody? So he says, and Ryan Servant is a realtor and media. He is big time in media, all over all of the social media spots and things like that. So finding out what your niche is, or niche, whatever that may be, and diving in to talk about that. The other thing is, done is better than perfect. With respect to videos, do not harp on, well, I don't know if I look good, because I hate to say this, because I talk about this for myself. What I see on video is who I showed to you guys today, right? We are who we are, we sound like who we are, and whether we are on camera or in person with your clients, it is who we are. We're blessed with that. So be confident to know that. The other things that I got on there, I thought this was kind of cool. You know, some of us, many of us may have left a day job, 8 to 5, getting, 40-hour work weeks. And although I think we probably work more hours, we were always capped at a salary amount or income amount, right? In our industry, we really have no ceiling, if you think about that. Whatever you decide that you want to do and wherever you want to be as far as that income, you can do it. You just have to remind yourself, you put that ceiling on yourself. You've got the limited beliefs, you've got the video beliefs, whatever that may be, but there is really an unlimited ceiling for that as realtors. And that's something that for me, that stood out. The other thing, so there are a lot of agents up there talking about like what the market's going to look like for us. And two things, so database management. How many of you guys have a CRM? Okay, I would say honestly, as we end this year, because here's the thing, we're already into the second quarter of 2022. Everything we start to do today is going to give us the year-end finish, if you guys can think about that. 90 days from now, which will be Q3, end of Q3 to Q4. So all of the effort and energy you're going to put in today, just remember that is going to help you to finish your year strong. If you don't have a CRM, right now, go in and find a CRM. You can, I think MLS offers yeah, even if it's an Excel spreadsheet, put something together that manages your clients, your sphere of influence. With all of the competition, and they talk about all the disruptors, there's no competition with your database. Would you agree with that? Yes. Right? Because they already know, like, and trust you, hopefully, right? Your sphere of family, whatever that may be. Now, if you're a new agent coming in, you got to build the database. One of the things to do is to look at a consistent number of people that you're going to communicate with every single day to help you build that database. And it doesn't have to be, because there was a huge conversation around, do you buy for leads or do you dive into your database? Well, from an expense standpoint, people are going to want to dive into your database. You just have to create it. Your friends, your family is where you start if you're a new agent. And then as you are out there, you're doing your open houses, or your circle prospecting, your door knocking, whatever it may be, just remind yourself that every single day your goal is to get more contacts. And then with those contacts, you nourish them, you cultivate them, right? And that becomes your database management. Does that make sense, everybody? The other thing that this is all basic, elementary stuff, what I think, but for them to be talking about it on big stages and them to be like top producing CEOs, all of that, I believe this is something that should be top of mind for all of us. It's relationships. So transactional business is one thing, and we will all do great in earning transactions, but the relationship aspect of it is where you're going to build generational wealth and legacy building, right? And honestly, if you're not in it for that reason, truthfully, you're just going to be doing transactions, right? But if you think about the life cycle of your clients, day one, they'll come back to you for potentially to sell the house. They'll come back to you to buy another house, that's 3. If they have family, if they have son, we're doing loans right now for the children of our parents 5 years ago that bought homes. So think about that. And I'm in it for the long game, the long haul, right? And so that's what I would say. Relationships was something else that I picked up on. database management, NFT and crypto. How many of you are in that space? Michael, you, Jason. Okay. Are you in it from you're in it from an investment standpoint? It is going to be something that real estate is going to be transacting on. And Brandon says, I think 15 years, they're already transacting on it today. Like when we went there, there's facilitators right now that are working to convert the cryptocurrency into actual U.S. funds. They have a sub-escrow account for that, so it goes right into title. You know, that was one of the things is like, how does this actually happen? They actually have a company that will do that. It's understanding there's different, like, people are offering to do transfer of wallets now, right? Which, if you're in crypto, a wallet is where your money is stored. And so that's going to happen. So if you're not versed in it, and you plan to be here for, you know, in the industry at least 5 to 10 years, I would definitely encourage you to find out how to get more information on that, because I think that is going to be something for us that is going to become mainstream. Just because of, one, the age demographics on it, but because everybody's going to start to figure out how to do it, and it's going to be easier. Look at Uber as an example. I mean, I was one of the people that said, I will never get into an Uber. That is so unsafe. I would never, ever, ever do that, right? Taxi, taxi, taxi. I by chance went into a taxi on as we came off of the airplane in New York, and unfortunately that taxi got hit while we were riding in it, so I'll never do taxi again just because of that. But the ease of convenience at the time was, and your mindset around it was, taxis are the only way to go. This is some crazy thing. I'm not going to ride with somebody in their car, but now the Uber app is the first thing that pops up. Anytime you think of even transporting, oh, we'll just Uber. It used to be, oh, we'll just take a taxi. No, just Uber it. Not even Lyft, right? So understanding that and where NFTs, crypto, blockchain. Michael, I know you've been doing this for a few years now. If you partner with somebody even to just get a general idea of what it is going to be something that I think all of us are going to have to contend with. Title is already working, having to hear about it, right? Because a lot of people are trying to transact. There's already been sales of NFTs with real estate. You know, there's actually an agent here, I think, in Signature that's looking to try to sell a home with it using an NFT. So this is a way of the future. I know there's a lot of stuff that's out there, but that definitely would be something I would say to get versed on. Yeah, Michael.
I don't know if anyone's aware if they saw the Celsius sign on the side of the building. That's one of the 5 exchanges that I have crypto on, and it's right above us here. I plan on moving out of the country. They've been trying to hire my fiance, who's an accountant, because she understands crypto accounting for taxes or everything. But I'm going to be going up there, talking with them about possibly coming down if management's open to it, and explaining a little bit about real estate and crypto and what's coming and what's currently available. There's currently loans now for real estate for people basically putting their crypto in almost like an escrow account. It's still yours, so why it goes up or down, you still own it, but it's coming at us like a freight train.
Yeah.
Also accept Bitcoin payment.
You have a seller that will accept it? Yeah, that's what I'm saying. When there's some, so you already have a seller that's willing to, probably your $8 million transaction, that's willing to actually take that. And that's a different type of transaction, right? Because it's not your normal, I'm going to wire out, go to the bank, $45 wire fee, whatever the case may be. This is wallet to wallet kind of stuff. Yeah.
Title doesn't know usually how to operate it. Now, I haven't found a title company here that really understands it, but at a particular date and time, you need to lock in a price because it's very volatile. It will bounce. Certain things will bounce, and you need to be able to cover that. So.
Yeah, so there were 2 sub-escrow companies that facilitate that. So they ultimately pull from crypto, convert it, and then they wire it into title. So that's already, because that's been the one thing, like, well, how do we make that happen? They already have companies that are doing that. So understand, like there were 2 that were at the Inman conference. This is going to be something that people are going to understand more, and things are going to be created more to make it easier for them. Yeah.
How are the loans part of that?
I'm not sure as far as the financing, because we will allow a client to use their cryptocurrency. So we'll convert it much like our stocks. Right, there's a date that you convert, it has to pull into US funds. We have to source it. So we can still do that with traditional financing. His situation is literally like, I'm gonna pull, $450,000 for my crypto, convert it. That's not normal conversion into a title company.
Yeah, or you can also just use it as security for the loan.
Yeah, margin loan.
Showing your associate here a company that's already doing that for the whole United States. And you can talk to him. I won't say the name of the company, but
Yeah.
they're doing that with crypto right now.
Yeah, so moral of the story is, that is going to be something that's going to, if you're not already hearing it from your clients, if it's going to be accepted, down the road, we're going to start to see that more mainstream. Get with somebody, get more information on it, become versed on it, because it's going to be part of our industry soon to come.
And more than crypto, blockchain. That's the
Blockchain, for
technology.
sure.
They'll do smart contracts, everything. You learn what that is, what blockchain is, and what a smart contract is first before you start going into crypto.
Absolutely.
Okay, well, thank you, Shelley.
My pleasure.
Good voice of our meeting. I appreciate you. So the Inman Conference, I've been to several, is really quite exhilarating. It starts early in the morning and they just go. There are no breaks between speakers. And you go, I really need to like take a little break here, but oh, this person is coming on stage right now, I really want to hear. But if you're interested, Inman is coming to Vegas in August and they are taking reservations now. So, I can't remember, I think it's August 3rd, 4th, and 5th, or something like that. Okay, so, no office meeting in person next week, but it will be on Zoom. We'll have Kathy Haney from CoreLogic, also known as Red, talking about the new one home, brand new client portal through CoreLogic that is free to you. So, excuse me, I'm going to make Beta responsible for sending out the Zoom link, and he will take care of it like he normally does. So thank you, Marie. We're going to miss you. Thank you, Shelley. And have a great week.